The U.S. and Israel, we all know, launched a wave of strikes against Iran over the weekend, hitting targets across the country and ultimately killing Iran's supreme leader, the Ayatollah Ali Khamenei. Oil prices spiked in the aftermath, sending shock waves through global markets. Joining us now is Eric Nuttall, president and senior portfolio manager at Ninepoint Partners. And Eric, thanks as always for joining us, especially on a day like this.
You bet. Happy to be with you.
We're seeing oil prices surge, not that surprising. Are they in the ballpark for where you'd expect them to be?
No, I think the reaction is slightly more muted than what many observers would have thought. It's actually incredible. Like, today is truly historic. The world has lost not just up to 20% of global oil supply with the Strait of Hormuz effectively being closed, but also 20% of global LNG. And so this is very quickly, or has quickly become, the worst case scenario for energy investors. I think the oil market has been conditioned from prior experiences to sell any geopolitical spike. The OPEC strike in Saudi Arabia in 2019, oil spiked, and then a couple of days later, it had given up all of their gains. I think this is a different environment today, and so all prior playbooks are not applicable. I don't think it was consensus. Like, I was in Riyadh about 3 weeks ago. It was not consensus that Iran would strike their regional neighbors. You've had very strong commentary coming from the UAE foreign minister saying the acts of striking, their infrastructure and civilians must go answered or cannot go unanswered. And so even Saudi Arabia publicly saying that they could be in the position to strike Iran. So it's not just where we sit today, which is unbelievable to any energy observer. It's where we're potentially going in the coming hours, days, and weeks. And anybody who thinks that this is a short-term event, our best intelligence has told us that Iran is sitting on about 1 month's worth of missiles, but the real threat is really drones. And so it's difficult to fathom unless there's a distinctive regime change, which seems hugely challenging, that it's going to be very difficult to have any major vessels, be it LNG or oil, going through the strait. And the world simply cannot absorb a 20% loss of global oil supply.
So what do you do with this then at this moment? I mean, we could see Iran has a month's worth of weapons that could keep the strait shut unless the Americans and Israelis can do something about that. Where are we left with this then? How are you approaching it?
We've been adding to oil exposure this morning, which is counterintuitive. We bought liquidity where we could. We bought some stock in a company called Strathcona. We were adding to Cenovus on Friday. We just think the complacency right now, and I have to admit, obviously, this is a very, very fluid, unknown situation. Maybe it resolves itself magically tomorrow, but I think complacency is offering an opportunity. We were already very constructive on oil in the second half of this year. We thought that fears about a historic oil supply glut were overblown. What we've been talking about very publicly is U.S. shale production growth is now over. We have OPEC spare capacity. We estimate about 1.4 million barrels per day, that being fully exhausted by the end of this year. And so the setup for oil was already very positive. As an energy investor, you never want to have to count on geopolitics for a number of reasons, but this is just additive to what was already a bullish thesis for oil. And so we're searching for opportunity. We're finding the very best opportunities remain in Canada. Security of supply, be it for natural gas through LNG or oil, is more important today than it was last week. And so we really think the spotlight is going to be shone on countries, on jurisdictions where they're stable, secure suppliers of oil. Canada, we are gifted with decades worth of inventory in the oil sands, in the Clearwater, in different plays. And we don't think that the equity prices are reflective of where we think oil is either trading now or is going in the years to come.
What would it take for people to keep looking at Canada? I mean, we don't have the production capacity, do we, to meet a sudden spike in demand from the oil not getting out from the Middle East? How long would this have to go before people would look at Canada as a feasible long-term expansion?
Yeah, it all takes time. We've been very public in our views that Canada has had to critically improve its takeaway capacity. We gave a very forceful defense of that before a standing committee on Parliament Hill a few weeks ago. It's a challenge that we must rise to. A brand new 1 million barrel per day pipeline is going to take at least 8 years. The world is hurtling into an energy supply crisis before the weekend's events. There are projects underway to expand Canadian takeaway capacity by about 600,000 to 700,000 barrels per day. There's another potential one that will require presidential approval to get more Canadian oil down to the Gulf Coast. That would be a couple-year initiative as well. But it's amazing, like within non-OPEC, so that's 2/3 of global oil supply, 74 out of the 78 countries of non-OPEC producing countries are in a permanent state of decline. And so really it's the opportunity that Canada has to address this mismatch between demand growth and supply growth when demand is expected to grow out to at least 2050. So it's just a massive, massive opportunity. We're optimistic that the change in tone out of the Carney government, where we're hoping for more action and a little less talk, that will come to be able to overcome any impasses of the coming months and start to get some real projects going, because it's our opportunity to lose at this point.
And I just want to go back to OPEC for a second. What does this mean for OPEC when you have one member launching missiles at other members? What kind of a damage would this do to that group, or will they absorb it?
Well, OPEC never talks geopolitics, and politics are always left in the hallway whenever they meet. It's difficult to see that occurring now, and to your point, one member is attacking others. I think this really shines a spotlight on how tight the oil market is. We've gone from this abundance mentality to what is very soon going to be a scarcity mentality at a time when demand growth remains very robust. The largest source of incremental supply of the past 15 years, U.S. shale is no more. And importantly, OPEC's spare capacity was always kind of that insurance policy for events like this. Well, even if you have capacity, if you can't move it because you can't get ships to put the oil on, it just speaks to you just how unbelievably tight this market can become. And so we're not counting on geopolitics for our investment thesis. We're bullish just because of this mismatch between supply and demand. Mm-hmm. But we have to recognize the strategic importance and the historic importance of what's happened just in the last 24 hours. I don't think anybody ever would have contemplated the world could lose 20% of LNG supply and up to 20% of oil supply all within 24 hours. And so, again, we think complacency is offering an opportunity.
Okay, we have to wrap it up there, but Eric, thank you as always for joining us.
My pleasure.
Eric Nuttall is president and senior portfolio manager at Ninepoint Partners.